Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. And joining me today at Marketsite is Jay Pestrichelli. He's the founder of Zega Financial, and we're going to discuss how to get upside exposure in a market that's trading at new all-time highs. But Jay, before we get into that, I love the name Zega Financial. Tell us how you got that name and a little bit more about the company.
Hey, Jill. Hey, thanks for having us here. Zega is an interesting name. It comes actually from the first letter of the children of my other co-founder and I, right? So our kids' names are Xander, Ella, Grace, and Abigail, and we came up with Zega from that.
All right, and so you're focused on registered investment advisory, but really using it through options.
That's true. We are a registered investment advisor providing services to other advisors, but we specialize in using options for long-term growth portfolios, not just speculative trading. We are more about using options for protection and income.
All right, so let's talk about that right now, because as we're sitting here on this Monday morning, the market's trading at all-time highs. So clearly clients want to have exposure for more upside, but they do want to protect their gains, right, and derive some income off of those portfolios. So tell us a little bit about what you're hearing from clients and what strategies you employ to make this happen for them.
Yeah, absolutely. So a lot of advisors that we serve ask us, hey, is now the time to sell, Jay? This market's been on a run. When do you expect the pullback? And for us, the answer is simple. Wouldn't it be great to have a strategy where your upside was maintained, but you offloaded your risk in the event of a downturn? And we do that through options, and we actually run it through a strategy called our buffered index growth. We call it ZBIG, stands for Zega's Buffered Index Growth product, but it allows investors to maintain their upside exposure in a market that really continues to show a lot of strength, but also offloads their risk by swapping it out for less risky assets if the market was to decline by, say, 20, 30%.
Now, are options employed with the ZBIG portfolio?
Yes. Oh, yeah, of course. Yeah, options are really the key. You know, options give you quite a bit of power when it comes to investing. And even though you don't have to use them for a lot of leverage, where a lot of people get concerned about that when it comes to options, they do let you do some creative things and build and construct a portfolio that allows you to kind of cash in on what you've experienced and the growth you've had so far and rotate into something that offloads risk.
All right, so let's say I have $100,000 in ZBIG. What does a portfolio mixture, what's an example look like? Is it equities, bonds, and options, or how would you manage that?
Yeah, absolutely. So we use options, say calls, for example, to give you the upside exposure. And as you probably know, the most you can lose when you buy a call is what you paid for that call. But it only takes a little portion of the portfolio to do it, say 10%. So it makes it feel like I'm invested 100% worth, but I've only spent 10% of the portfolio. Then the rest of the portfolio, we use fixed income, short duration fixed income products that are hold to maturity products. So we have offloaded some of the interest rate risk, and those fixed income products pay for those long calls. So it's almost like saying you have a free call on the market. Of course, nothing is free.
Right.
We do carry some risk in that short duration fixed income. But historically speaking, the risk associated with fixed income is much less than stock risk.
So out of all the strategies at Zega right now, is this the one that you're employing the most because of the way the market is trading right now?
This has definitely picked up the most steam with our advisors, right? They've certainly, because they've done so well for their clients investing in stocks all this time, and they're trying to, selling is not an option. I mean, you could go to cash, of course, but now you're a market timer. Most advisors don't want to do that. So they need to sell, and what do they go into where they're still not disadvantaging their clients? And so this is a product that is very popular.
Well, let's wrap it up with this and have a general market conversation, because as you were saying before, is now the time to sell? I feel like people have been asking that question over the past 2 to 3 years, and it doesn't seem as if that's the way the momentum is going right now.
Yeah, I mean, obviously the market is very strong. We haven't had a 10% pullback since February of 2016, and sitting on the sidelines is very tough to make that decision. We don't, right? We believe that, hey, use options to create an exposure that allows you to have that upside. But if your timing is wrong, okay, you've got this buffered zone of protection that allows you to avoid and offload some of that risk if there is a pullback. So I almost like to say we don't try to time the market. Why try to time it? That's risky business, and it's tough to do.
Well, because the thing is, if you don't get the top or the bottom, if the momentum goes one way and establishes a new trend, you're going to have plenty of time and money to make. You just don't, because trying to top the bottom or the top, you'll never be able to do that.
No, that's exactly right. It's
very difficult. Just look at the past 2 to 3 years if you've been trying to sell this market. If you have a portfolio left and trying to do that.
Yeah,
right?
I agree. So we don't try to do it. We invest, but you invest in a protected way, and options really are a great tool to do that.
All right, well, thank you very much for joining us at Marketsite. And traders, as always, thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.